We're expecting Instacart to set their IPO pricing in overtime during the next hour. Joining me now is Firstmark Capital founder Rick Heitzmann. Welcome back.
Hey, Scott, how are you?
Good, thanks. So Instacart, let's look forward.
Yes.
And I'll ask you about ARM in a second,
Sure.
but what are the expectations here and what is going to be a down round, the way you look at it?
Definitely going to be a down round. They raised money at $38 million a couple of years ago. It's going to be down 70%.
Wow.
But it's structured so it's going to be a well-performing IPO. So they cut price, they limited the float, and priced it so for a pop.
What goes through the mind of a venture capitalist, an investor who got in at 39,
yes,
and who is sitting there today? Just put me inside the head. I mean, I can't even. I don't know how you think about that.
So there's two versions of venture capitalists, right? They're the people who got in at 24 cents.
Yeah, of course. They're feeling really great.
Fine. And then there's the guys who did it at 39. The guys who did it at 39 billion are saying, I need to get liquid. I could hold it on my books at some artificial rate, but that doesn't do anyone any good. The best thing to do is get the stock liquid, get the company.
In other words, go public.
Go public. Go public, because otherwise it's just you're just waiting, pushing off the inevitable.
What does it just suggest about where we were and where we are, and the tremendous reality check that's taken place over the last 18 plus months?
We've talked about it for 2 years. We said, hey, there's going to be a lot of companies who are going to have to face their comeuppance. Even the best performing companies, and we're looking at both Klaviyo and Instacart this week. They both perform at the top end of their metrics in the SaaS market and the consumer market, and they're both going to take a discount to go public. And then we said the IPO market will not function until people capitulate on value, and there's a reasonable reflection of value in that IPO price. And then we also said the first people that go out will be companies with very good metrics, growing nicely, strong margins, profitable.
Instacart's profitable.
Profitable, growing quickly, great consumer retention metrics, and we'll price it at a discount for a pop. So this is the last piece. So it'll have to pull buyers, IPO buyers, back into the market. And we saw a little bit of ARM, although that's really kind of a false, true IPO. But these two will show how receptive those buyers are to the market.
How will that mentality of what you described, they want to get liquid, like later stage VC people who got in where the valuations were super rich and now they've come down. How is that going to impact the pipeline of other companies that are in the queue and the push-pull, some wanting them to go public, get liquid so that they can get out versus waiting for the right time?
Well, I think the mature venture capitalists or mature private market investors are going to say, hey, the market is what the market is. So what we paid 2 years ago might not be a true reflection of value. Where the market is today is a true reflection of value. It's in the best interest of the company and even ourselves to let the company trade at a market price, begin to get liquid, return that liquidity to our investors. And if we made a bad investment, if you lose 50%, that's okay. But holding out some false hope, I don't think so. Okay.
All right, so ARM last week, right? Yes. We got Instacart, Klaviyo, you said, and there are many others in the queue, and people mention the same names over and over again. So what is the state of the IPO market? Where are we?
We're all on the edge of our seat. We're all waiting for the next couple of days. You're pricing Instacart in the next hour. The anticipation is they've already moved up their range. Hopefully, we'll price it at the high end of their range. They'll hopefully trade up, and you start getting those signals of a traditional IPO. Pricing at the high end of the range, pricing in the multiple band, that there's a lot of people with their finger on the button of draft to submit their S1 to the SEC.
How do you look at the ARM IPO, right? It was successful that day and the day after. Here we have a pullback of some 6% today. Very small float. Customers participating in the deal. Was it as good as it seemed on the surface because of those variables?
And it's also of size. It's also in the mobile ecosystem. There was a number of buyers that had to buy, so they were able to take advantage of a lot of insider buying or ecosystem buying in a very small
and some of these other companies,
to artificially create that pop. But they also pretty fully priced it. So I don't think anybody was expecting that stock to either double or persist. And it was also a mature stock, not growing, priced at 20 plus times revenue, whereas this next wave of companies are more the traditional tech growth stocks.
All right, good stuff. We'll continue to use you as our guide on all things tech and IPOs. Thank you very much.
No problem.